I'm going to start with U.S. banks because they did extremely well last week, especially JP Morgan. Should European banks compete with the U.S. ones?
Well, I think we have a real chance, provided that we have a clear strategy and a focused strategy. As you know, we've chosen to be a wealth manager with strong investment banking capabilities, very much focused on the ultra-high net worth. And in that space, the results have been very good, and we've been actually in leading positions in a number of markets and doing well.
But can you really compete if you have a different regulation set and negative rates?
It's not. It doesn't make anything easier. But again, if we're focused and we know what we're doing, I think we have a chance. If you look at what we've done, certainly in Switzerland, we're really in a leading position, doing very well. In Asia, we've been doing very well. In the rest of the world too. We're not in the US in wealth management, but that's a strategic choice we made years ago. I said many times on the record, our appetite to take on JP Morgan, BAML, and the others in America is limited. In America, what we do is investment banking, and there, really, the restructuring of our markets activity has been quite successful. We're really now, almost top 5 in equities and in fixed income, doing very well. I mean, you saw the results; they're very good this year.
What are your clients telling you that they want in 2020? How much? I mean, is it a lot of pressure on giving them really outstanding returns?
It's early days. It's early days, but I think people are positive about 2020, and so are we. The U.S.-China trade agreement is very positive for markets, and also the other big wave you've heard from everybody, I'm sure, but is ESG. I mean, that's real.
Is it real?
It's real. I mean, the numbers are very large, both on the institutional and also on the retail side. Because we are very much in that wealth management business, we deal a lot with millennials in terms of the next generation, and clearly they are very focused on the, if you wish, the ethical signature of the businesses they invest in. We've created, for instance, responsible consumer products, funds investing only in companies that have responsible practices. Those are very successful.
So what does that mean, holding the feet to the fire of companies that don't do enough on ESGs, or does it actually mean, I don't want to be invested in fossil fuel companies?
We actually have a kind of middle of the road position of that. On that, that we said in December that we will not invest anymore in coal mining and coal-fired power generation, but we are very focused on the transition because we need to transition to a lower carbon economy, but that will require a lot of resources. So we have a transition bond initiative that we are driving to ensure that companies that want to transition can transition and raise funds for them. The green bond market is exploding. We did 29-30 billion in the recent years, and 2/3 of that in the last 2 years. Yeah. So there's a strong acceleration.
Does that go away in a recession? So all of this goodwill?
I honestly don't think so. I think it's actually very important that we keep driving that agenda through the economic cycle. It's a good thing.
Yesterday, your I guess biggest rival, UBS, had to change some of their targets to the downside. What's the read across for Credit Suisse?
Look, as you know, I have never and I will never comment on the performance of our peers. For us, we present our results on February 13th, but I think we said at the Investor Day in December that 19 was significantly better than 18, and we stand by that statement. You know that we slightly reduced our return on equity target. We actually moved it out by 1 year. Okay, we thought we'd reach 10 in 19. We're confident we'll reach 10 in 20. But the key thing is the momentum. What I like about our story is not so much the absolute level at which we are, it's that we've been improving the profitability very strongly year on year. And that's the long-term story for our investors.
Will negative rates go further negative, or is there now a realization amongst policymakers that they just need to rein it in?
It's a tough one because, as you know, there are 2 types of factors driving that. Some are cyclical, linked to the aftermath of a crisis, dealing with a crisis, rescuing the banking sector. Others are more structural. The demography is a kind of, with the aging population, a kind of glut of savings, and interest rates are just kind of a price of money. And those long-term trends weigh on the level of rates, and one should expect rates, negative or not, to stay low for a sustained period of time.
So what does it mean for, is it asset bubbles? Are we mispricing risk? What does it mean for actually the model of banks?
Well, we need to be very efficient. I mean, you've seen the pressures on cost. You know the work we've done at Credit Suisse to reduce our cost base very, very significantly in the last 3 years. That's the starting point. We need to de-risk, and we've done that massively also, to be able to navigate that environment, because I think there's also a layer of political risk that has added to the difficulty. But I'm still very positive about the world economy.
Worldwide, or more in Europe, you think?
More in Europe. About the world economy, I'm still very positive. We see growth everywhere. We still see good growth in Asia. We're still positive on China, still positive on Southeast Asia. Latin America, we've been quite bullish. Brazil has been doing really well. Middle East is doing okay. Africa is doing well, so that's a lot of the world, and the US, of course.
But so what's the concern? I mean, you know, 2020 could also be, I hear from certain quarters, the year where Europe does better than expected. So what are you concerned about in Europe? Is it the mechanics of how things get done?
I mean, we're quite lucky, because in Europe we're mostly in Switzerland, which, you know, 40% debt to GDP ratio doesn't have some of the problems of the Eurozone. For the Eurozone, I'm moderately optimistic. I agree with your assessment that things are getting better. You see some of the reforms going through, but it's going to be a long journey for Europe.
You know, what is the one thing that will impact market volatility? Is it the U.S. election? Or is it politics?
I think it's hard to name one thing, but the U.S. election definitely a big factor. Definitely a big factor. Depending on how it goes and how uncertain the outcome is, you can expect some volatility in the markets.
Do some of the chief executives that you serve, are they ready to put money back into investing in the real economy? Are we going to see a mood shift?
Yeah. I think the mood is better. I'm just a bit cautious, because in the last 3-4 years we've always met in January here, and we've all been quite positive, and every time there's been something. Last year it was the government closed down, etc., and the year shaped differently. So we're cautiously optimistic. The dialogue with clients is positive. If you look at our M&A pipeline, announced deals year on year are up more than 90% for us, Credit Suisse. So there are signs, signals that are very positive. But you know, it's very early in the year. We've done 3 weeks in 2020, so you'll allow me to remain cautious.
I mean, every time we talk about Brexit, this time I don't know what to
I was surprised you haven't brought it up yet.
I know, because is it fixed? We don't know the future trading relationship. No. But it feels like at least
But I think a lot of the uncertainty has been dealt with. For us, we have had a strategy of basically focusing on Spain and Germany, and that has worked very well. I'm going to see the Spanish Minister of Economics later this morning, and we're quite pleased with the way things have unfolded.
When you look at U.S.-China, the phase 1 deal, are we going to get a phase 2, or do markets not really need that, actually?
I think the latter. I mean, we all hope that there'll be a phase 2. We're really pleased and relieved that there's been a phase 1. It's important. It's a really very important signal that this thing got closed, and it's been now proven that the US and China can actually agree and get to the point of an agreement.
Is there anything you can tell us on bonuses? What will bonuses look like for your bankers in 2019 compared to 2018?
It's a bit early to say. We're still closing the year. For us, it's been a reasonably good year, but we're coming out of the deep restructuring. 18 was profitable, 19 will be even more profitable. We're quite pleased with the results, but we still also need to be cautious, because investors have accompanied us through that, have suffered the dilution, and we need to find the right balance between rewarding our investors and the staff. You know, we've completed our buyback. We did $1 billion of buyback in 19 as promised. We've paid about 700 million of dividends. So that return of the capital, 1.7 billion, after raising 10 billion, is a very important part of what we're doing.
Are you expecting consolidation? I ask you again every time, but are we, you know, do we need to, what needs to change for real consolidation to happen?
I think it's desirable. I mean, clearly, if you look at the top, the concentration of the top 5 European banks, we're much lower than in the US. It needs to happen, but the regulation needs to allow that to happen. And I've always also talked about the state of the opinion or the public, and people need to accept that larger banks would be a good thing for the European economy, which is something I believe, but we still have a job to do to convince the public that larger banks can also be safe and not endanger the whole economy.
But does a banking union help with that?
Yes, 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 it's very important. Very important. Banking union is important. Level playing field, flexible labor markets. There are a lot of things that can move us in that direction. I think it will happen, but it will take some time.
You, Credit Suisse and yourself have been a lot in the news because of bank scandals. When will that be over? It feels like there's trickling from past things.
We've talked about it publicly, as you know. I've talked about it at the results in October. The board has talked about it. The key thing for us is that we've taken measures to improve our policies and internal processes, etc. The media attention is seems to me to be fed regularly every weekend, but this is being investigated, and as the investigations conclude, I hope that we can move beyond that. But what I can say is that internally, I was pleased with the Q4 results, because it was very important for me that we wouldn't get distracted by all that, and I think you will see when we present our results that the staff continue to focus on serving our clients, which is really our raison d'être, and developing the bank as planned.
But can you say with certainty that this won't happen again from now?
I have said that, yes. Yes, we've put in place measures and policies and processes as an objective, but it doesn't happen again.
You're focused on clients. What are you most looking forward to in Davos? Is it business deals, or is it listening to some of the world leaders?
Well, it's always
get out of Davos?
It's always a mix. I mean, like yesterday, I was at a lunch with all the multilateral development banks organized by the Swiss Minister of Foreign Affairs, and that was very good. You know, the Inter-American Bank, the Asian Infrastructure Bank, World Bank, etc. Because when we talk about ESG, one of the key issues is that we have to develop ESG-friendly projects, and there a kind of public-private partnership, working closely. The multilaterals have a big role to play. We've just issued a blue bond with World Bank, which we're quite excited about.
A blue bond, so what?
It's focused on oceans,
water?
exactly.
Okay.
Focused on oceans to combat pollution in the oceans, etc. And we're working very closely with them on a number of ideas. So that's exciting. And of course, there's always the clients.
What do you need from, I don't know if it's regulators or governments to make ESG more real? I mean, we're lacking a common definition of a lot of the things that we talk about.
And that's something we discussed yesterday at the meeting. Standards are very important to avoid greenwashing, to avoid certain negative aspects. We need standards that are accepted. We're working on it. When I talk about those transition bonds, we have a climate bond initiative. What we're doing with them is exactly about developing standards so that bond market can grow and develop positively.
Where do you see the most appetite for some of these green bonds? Is it coming from your Asian clients?
It's really across the board. It's across the board. If you look at China, the emphasis that China has now put on the environment, the lead they took in solar, etc., etc. In every region, in Europe, I think it's very well accepted. We see that in the US. It's really across the board. Really across the board, and very much driven by clients, but also by institutional investors. Yeah. As I said, they're I'm looking for the right word. They have a fiduciary duty vis-à-vis the actual owners of the asset, who are now applying more and more pressure on them to see that all that money is put to clean and productive use.
Okay, I know you have to run. So just briefly, if you look at Asia, where are you most optimistic about? We've talked in the past about supply changes because of the U.S.-China trade. Does it mean that places like Vietnam will see a lot more growth?
We're very positive, really across the board. Vietnam has been a really bright spot where we've been doing very well, but the Philippines is also a very exciting country. Thailand continues to do well. All the Asian countries, Singapore, Malaysia, plus China, where things are stabilizing, and we think it will be a good year in China. So overall, we remain very positive. We're now past $200 billion of assets under management in Asia, and we continue to grow. We like the region, and we'll continue to invest.
Welcome to Instagram.
Oh my God!
It's been like 2 days.
Yes, I'm an Instagram. I finally entered the 21st century. It took me 19 years, but I am very excited about it, and I'm learning.
Is there a good way to talk with millennials? Or
yeah, I think I was not an early adopter, but I'm a happy adopter now.